Well, hello, traders and investors. Today is the end of the first week of October. It's October 7th. It's a Wednesday. We've got a lot to talk about. My name is Roger Scott. I'm the head trader for Wealth Press. In case you don't know, let's get into it right now. So first, let's start with the world news. World shares were mostly lower on Wednesday after U.S. President Trump, that Trump of ours, ordered a stop to talks on another round of aid for the economy. U.S. futures were slightly up. They closed down sharply last night. They're up overnight, but they still down over the last 24 hours after dropping on Trump's announcement the day before. Markets were slightly down in Germany, France, Japan, and they're closed in China for the week. Hours after his tweet about ending the stimulus talks, Trump appeared to edge back a bit, called on Congress to send him a standalone bill for stimulus check, $1,200. He's all over the place last few days. Maybe a little mania after taking those COVID-19 drugs. I don't know. I can't figure Trump out. I really can't. Trump's announcement via Twitter that he has suspended the talks until after the election came after Federal Reserve Jerome Powell urged Congress to come through with more aid, saying that too little support would lead to a weak recovery, creating unnecessary hardship. Let me show you guys something interesting. This is the economic calendar for this week. Usually they have very official names. Look at this. Powell trying to prevent economic damage from getting worse report. I've never seen anything like that in my life, okay? Usually it's Powell like this, FOMC minute, John Williams speak, Jerome Powell speaks, trying to prevent economic damage from getting worse report. The Fed is really getting up there. But again, I've never seen that. I wanted to point that out to you. This is what I was just talking about in the news. Today we've got FOMC minutes, and tomorrow we've got jobless claims. Let's go back to the news. I wanted to show you this. And again, some analysts characterize Trump's move as a likely negotiations ploy. Chinese markets closed for a week-long holiday, which means Asian markets are subdued. In a series of tweets, Trump said, "I have instructed my representatives to stop negotiating until after the election, when immediately after I win." Okay, he's got a time machine. "We will pass a major stimulus bill that focuses on hardworking Americans and small businesses." He also accused Nancy, of course. Poor Nancy. That Nancy Pelosi. I think she should retire. I'll just leave it at that. She's getting a little too emotional. She's not negotiating in good faith. I don't know if either of them are negotiating in good faith, but I'd love to see another round of support for the people of America. Powell, the Fed chairman, had repeatedly urged Congress to provide additional aid, saying the Feds can't prop up economy by itself. That's absolutely true. Even with the interest rates at record low, the expansion is still far from complete. Powell said in a speech that National Association of Business Economics group of corporate economic economists were there. Trump mention of a $1,200 stimulus check is a reference to a batch of direct payments. The stimulus cutoff coincides with a slowdown in hiring, as employers added 661,000 jobs in September, the government said Friday. That was down from 1.1 million in August and 1.8 million in July. Trump's COVID-19 diagnosis and growing outbreaks at the White House and Pentagon have highlighted the risk of further shock to the economy if escalating caseload lead government to bring back restrictions, which is possible. And again, crude oil still below that $41 that frackers have to pay in the U.S. to start working with it. So they are bleeding. Big report. We've got the FOMC, which I'm not really, what is the Fed going to say? Pretty much repeat what they said here, trying to prevent economic damage from getting worse. We're not going to learn anything today. I don't think so. Tomorrow we have jobless claims, and I'm expecting the number to be, again, the key is to be below the 4-week moving average, but now the consensus is, hey, we've been at these levels. We've been frozen at prior levels of more than 260,000 for more than a long time. So they want this number to get back down quick. Just the fact that it's coming down is fine, but it's not coming down fast enough. I mean, we went from 1 million to 200 to 800,000 in several months. That's not good. That's a huge amount of unemployment. And California is now offline when it comes to claims data as it scrambles to limit unemployment fraud, which is huge in California. So again, this is not a great number. So the big reports of the week is going to be FOMC, which is probably going to be kind of subdued, and jobless claims tomorrow. Now, I want to show you guys something interesting. The bond market. The bond market is now hitting the 200-day moving average. That means the market believes that the Fed is not going to lower rates anymore, and that short-term rates, 30-day bonds, 90-day bond yield may be going higher. Bonds go lower, yield goes higher. If yield goes higher, it's good for financial companies. But I'm not so sure of this, and I'll show you why. If you look at the financial, here, let me show you the financial sector. If you look at the financial sector over the last 3 months, it peaked out here on the 3rd, but it hasn't been able to go higher. It's still below the 200-day moving average. And I'm just not seeing the financial or the real estate. And I'm talking about the financial and the real estate sector. But let me just show you something here. Let me go here real quick here. So again, what the government's thinking, if lower bonds, higher interest rates, better for the financial, all right? Not real estate. I might have said real estate, financial. So again, I'm just not seeing it. We're still below the 200-day moving average. We're still below the 50-day. We're at the 50-day moving average. If you look at the long-term trend, we're far from breaking all-time highs. So we've seen a few bank stocks rally on this, and I think we're going to see a pullback. If you look at the bond market, let me go back to the bond market here. I don't think the bond market's going to go down much further. It's oversold right now, okay? And I think we're going to bounce off this 200-day line. But this is creating, I believe, false sense of security for financial stocks. But let me show you where I'm going with this. Let me go to my 90/20s. So these are stocks that are in a major downtrend, had a little upside, and now pulling back down. Does that sound familiar to you? Stocks that are in a major downtrend, meaning they're below the 200-day moving average, they pulled up a little bit, and now they're set to go down. I'm talking about the financial sector. What do you know? So let's go to StockFetcher, look at my 90/10 to the short side. There's 25 stocks, and there's 0 to the upside, okay? These are stocks that are in a long-term downtrend, making 90-day lows, pulling up for 10 days, and are breaking down again. So let's take a look. Look at this. Bancorp, MTB, made a low, pulled up for 10 days, closed at the bottom. That's a stock to sell. MTB. Let me show you MTB. I'm giving you a bunch of shorts in the financial sector because I don't think anything good's going to happen. I mean, look at this thing. It didn't even hit the 200-day. It touched the 50-day, and now it looks like it's going to back down again. I would be selling this right around the 97.80 level and covering it right around the 102 level. That's MTB. Let's go fetch another one. And again, I'm going for the obvious ones. East West Bancorp, EWBC. That's another short. You may have to rewatch this video. But again, hitting the 200-day moving average, long-term downtrend, hit a 90-day low, 10-day high, closed at the bottom of its range. I'd go short at 35.50 and cover it at 37.80 or so. EWBC. Let's go fishing more. Hey, look at this one. Wall, Western Alliance Bancorp. Imagine that. What a coincidence. The point here is I want you guys to get into my thinking and understand what I'm looking at. Long-term downtrend, 90-day breakdown, 10-day high, breaking down on the 50-day line. I would go short at 34.50, and I would probably cover it right around the 37.50 level. Let's continue hunting. BXS. Are you noticing a pattern? TCF, BXS, SEIC. Let's see here. PNFP. I'm only going for the obvious. CFR, look at that. 90-day low, 10-day high, broke down. GBCI, Glacier Bancorp, Black Hill, these are all financial companies. So let's see. We've got 20 companies breaking down. And out of those 20 companies, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 12 out of 20. These are 90-10s, 90-day low, 10-day high. Again, what's my logic for this? The financial sector is rallying a little bit. I think it's a false rally because I don't think the bond market are going to do anything, especially between now and the election. And if anything, with interest rates near zero, I don't think they're going to go up too much. And I don't think the falling interest rates, even though yield is getting higher, I don't think it's going to do enough to the banks to generate a lot of income because they work on the spreads. Again, I looked at the bank stocks. I looked at the financials because of the bond market going down, which is good for financials, but it's not a long-term play. I looked at the 90-10, which is a short-term reversal when we have a 90-day low, 10-day high, and a pull down to the downside. 90-day low, 10-day high, pull down to the downside. Are you guys seeing that? 90-day low, 10-day high, breakout to the downside. There's plenty of bank stocks to short. Again, MTB, EWBC, WAL, WAL, SEIC, BXS, TCF, PNFP, PB. I think I might have missed that one originally. And others. Glacier Bancorp, Cullen Bank, CFR, GBCI, BKH. I think you guys know where I'm going with this. Fade the bank stocks because I don't think interest rates are really going higher. I think the bond market is just pricing things in ahead of time and they had a little minor sell-off. But it's giving you advantage to go with the long-term trend. Financials below the 200-day moving average. What you're doing is selling the short-term trend and selling the long-term trend. So the short-term trend is going higher. You're fading the short-term trend and you're going with the long-term trend. Fade the short-term trend, go with the long-term trend. That's what the 90-10 is all about. And today, it's fading bank stocks and financial companies. Now, I've got something for you. Don't go anywhere. No one knows how to profit from a flash crash or a rebound quite like I do. Really, I'm pretty good at it. And I have just the thing you need to survive and thrive in today's stock market. A system that works during and after a huge market crash. We just had one recently. It protects you on the way down and delivers stock primed to explode higher on the way up. And if I'm correct, and I typically am, I'm about 85% accurate. My newest stock pick could earn you 92.5% on your capital in 1 month or less. Can you imagine making 92.5% in 2 weeks? Not even a month, in 2 weeks. 10 trading sessions. Folks, you are going to love this. I'm not kidding. You're going to love this. I'm going to show you how to thrive in every type of market cycle. All right? And it's easy and it's simple and it's one of my favorite ways to trade. I cannot wait for you to see it. Click on the link below to get my number one rebound stock that's trending higher, and it's going to go higher for quite a bit. I'll talk to you soon. Don't miss out on this. Find stocks that are ready to explode higher. I know my stuff and I want to teach you some of it. Don't miss out. Talk soon. Have a great day. Give me some comments. Give me some feedback. Send me an email, support@marketgeeks.com. If you like my stuff, if you hate my stuff, if you don't like the way my shirts look, I don't know. I don't care. Give me feedback so I can make this better for you. I'll talk to you soon. Don't forget, follow the link below. Bye, guys.